Welcome to the Knakal News Network. The Knakal News Network is brought to you by Cushman and Wakefield, New York's #1 building sales firm.
Hi, I'm John Hageman, Sales Team Manager for Team Knakal at Cushman and Wakefield. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of Investment Sales in New York for Cushman and Wakefield. Talk to us about what happened in the investment sales market in 2014.
Hags, as you know, I've told people that 2014 was the best investment sales market that I've seen in the 31 years that I've been brokering in New York City. It was absolutely fantastic. We had a good supply of available properties for sale. We had demand that was coming out of the woodwork seemingly. Capital was flowing into the market from every corner of the globe. And it just couldn't be better dynamics.
You always like to talk about the numbers. Let's get into the nitty-gritty. How many properties sold last year?
Well, last year we had an absolute record number of properties sold. That is the metric that we think is more indicative of actual activity in the marketplace. Most folks look at dollar volume, and the dollar volume was very, very strong last year. We had about $57.7 billion of dollar volume of sales in the city. That was not quite the record of $62.2 billion that we had in 2007, but still was a very, very strong year. The number of properties sold, though, were off the charts. 5,532 buildings sold last year. That exceeded the previous record of 5,018 in 2007 by a very significant amount. It really was just incredible in terms of the activity that we had.
Wow, that's an incredible number, Bob. Why do you think so many properties sold last year?
The market last year was really involved in what economists refer to as a positive feedback loop. Values are high, so potential sellers find those prices very compelling. They put their property on the market. All of that demand swoops in and exerts further upward pressure on values as they compete for that property, establishing a new pricing threshold, and this thing just keeps spinning and spinning like a top. It was really unbelievable.
So, Bob, how did this affect value?
Dramatically. Citywide last year, on a price per square foot basis, the average property appreciated by 20%. In Manhattan alone, that appreciation was 34%. Those numbers are just incredible, and that is why sellers were finding those values so compelling.
So, Bob, based on the end results and 2014 being such a great year for activity, what was your forecast going into 2015?
Hags, our forecast for 2015 was counterintuitive. We expect fewer properties to sell in 2015, but an increase in dollar volume.
Bob, how could that possibly happen? What do you mean by that?
We think that there is pent-up demand in the marketplace to sell large properties. We haven't seen the kind of activity in 2014 in the very, very large mega deals sector. Combined with the fact that the CMBS market is anticipated to increase by 30 or 40% this year, that should make those very large mega deals easier to do. With regard to the number of properties sold, we were at such a record level last year. We expect to see a 10 to 15% drop in the number of properties sold this year and a record volume in terms of dollar volume. And these are things, although we're filming now at the end of the first quarter, we projected these and had them in our newsletter back at the very beginning of the year.
So, Bob, first quarter's done. What's happening in 2015 so far?
Well, so far it's holding pretty true to form. In the first quarter, there was 1,234 properties sold, which is on pace for around 4,900, which will be about that 10, 11, 12% drop from what we saw last year. But interestingly, the dollar volume hit a new quarterly all-time record. We had $20.7 billion of investment sales activity in the city in the first quarter. That eclipses the fourth quarter of 2012, which was slightly in excess of $20 billion, and the first quarter of 2007, which was slightly in excess of $20 billion. So dollar volume is on pace for over $80 billion. We don't think that will be the case. Our forecast was that dollar volume would be $65 to $70 billion. We still feel good about that forecast, and we're right on in terms of number of properties sold. In summary, 2014 was the best investment sales market we've seen in 31 years. Dollar volume hit $57.7 billion, while the number of properties sold hit an all-time record of 5,532. In the first quarter of 2015, The dollar volume hit a new record of $20.7 billion. It is anticipated that this pace will not continue at that elevated rate, but nonetheless, 2015 should be a fantastic year for New York's investment sales market.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.